Part 4, Psychology of Trading. Okay, so let's go over a couple things, okay? Don't spend your day bouncing from product to product, as you will keep missing trades. This is the number one issue with a lot of traders, okay? What they're trying to do is they're trying to search all day long, trade 10, 15 different stock symbols, future symbols, whatever, looking for the trade setup, okay? And the problem is while they're searching, the trade setups are happening on the other ones. Okay, trust me, I fell into this for a couple of years. When I first started learning, I was always trying to find the next big thing. You hear something on the news. By the time you get there, it's already taken off, right? And then you read the news on another stock. Then you go over there, or you're just going through your entire watch list. I've learned through my mentors and everybody, you could trade one product and actually make a decent living trading just that one product. You'd be amazed. A lot of the professional traders on the floor and all that, it's all they do is they trade one thing. Okay? Now, it's very hard because, yeah, there are times where the E-minis aren't moving. Okay? I'm bored. I want some action, right? I'm like, oh my God, I haven't made a trade all day. But that's understanding yourself and understanding the patience part that we talked about in the last video. You need to have patience. And I just kind of keep reaffirming that to myself. The trade will come. There are days where I'll open up the computer, get everything set up, and within maybe the first 20 minutes, I've made my trade, made my money, I'm done for the day. There are other days where I sit and the very last minute of the day is when I finally put the first trade on and make my money. So it could come anytime. You have to be aware and expect it at all times, okay? And that's why I say trade one product. Don't bounce around from product to product or stock to stock or future to future, okay? Don't go, hey, I'm going to trade crude oil and I'm also going to watch NACS, because while you're changing all those things, right, going from chart to chart, looking for those trade setups, the E-minis are actually setting up. You just need to kind of start doing your homework a little more and realize, hey, this is where I want to buy and this is where I want to sell. So, do you have issues with pulling the trigger? Okay, a lot of clients that I have, okay, that I work with, they have issues with pulling the trigger. Now, what do I mean by that? They see the trade and then they freeze. They start thinking too much, okay? What if I'm wrong? What if I lose money on this trade? What if I place the trade and it doesn't work out like the last trade that I did, okay? You can't think that way. Everything's about perception. When you play blackjack, okay? If you've ever played blackjack, do you lose one hand and sit there and go, don't deal me another hand, I'm going to sit out this hand because I lost the last hand and I don't want to lose again? No. Okay, you don't do that. You just have to take every single trade. But that's what stop losses are for. They're going to teach you, okay, that you might be wrong, but it's okay because you're not staying wrong, okay? And you actually have a small loss versus a very big loss because you don't want to take $100 loss, so you let that $100 loss go to 1,000, then you finally panic out, right? So then what happens is you have issues for the next week, 2 weeks to eventually start to pull the trigger again and get back in. Easiest way to control this is trade smaller sizes. Trade what's comfortable for you. Okay? Now, you might trade 1,000 shares and it doesn't bother you. While the person next to you might trade 50 shares and they're sweating, their palms are all sweaty, right? And they're like, oh my God. And they're trading Microsoft, a stock that moves 20, 30, 40 cents a day, right? And their P&L is moving $10 a day, right? While yours is moving maybe or the person next to you is moving $1,000 for every 20 or 30 cents, okay? Everybody has different risk tolerances, okay? But if you have the issue of pulling the trigger, trade small. Get in the game, okay? You don't need to show up and say, hey, I'm better than you, okay? It's kind of like the gym. How many people really care how much weight you could really lift, okay? Nobody does. It's all in your head. You think everybody cares, but at the end of the day, the women don't care, okay? The guys don't care. Nobody cares if you're curling 10 pounds or 40 pounds, okay? Because, and if they do, then who cares? But trust me, 99% of the people that are in the gym, they're just in their own world, okay? They could care less. So with having issues pulling the trigger, the one way and the best way is trade small. Trade what you can handle. So Emini S&P futures, okay? Every point is worth $50. Well, if that's too much risk for you, then go and trade the SPYs, SPY. Trade 100 shares of SPY. So every 1 point in the Emini S&P futures is now only $10 with the SPY, right? So if it goes against you by 5 points, okay, let's say normally you'd have a 5-point stop loss, well, that would be a 50-cent stop loss, okay? And on 100 shares, you will only lose $50 versus, or sorry, $100 versus $250 if you were trading the Emini S&P futures. So that is my best advice for you. If you have issues pulling the trigger, if you're fearful, okay, just trade smaller sizes. And trust me, this exercise will work. Trading is not gambling. There is skill involved in trading, okay? Now, a lot of people, you tell people, hey, I trade, and they're like, oh, that's the same as gambling. No, it's not. We have the odds on our side, believe it or not, because we're able to see the chart. We're able to control our risk, okay? Las Vegas has the odds on their side because they're open 24 hours a day, 7 days a week. You cannot trade 24 hours a day, 7 days a week. Okay, you need to sleep, you gotta stop. They actually are able to play the odds of winning or playing hand after hand after hand. Okay, and with that is where they're able to increase their odds of success. And then guess what? You kind of get tired, you get drunk. So they actually are able to skew the odds in their favor, right? They get you drunk, you start betting more, start losing more, right? Then you have your emotions. Oh my God, I'm already down $500. I'm gonna double up to catch up. I'm gonna bet another $500, and guess what? Now you're down $1,000. Okay, with trading, there's a lot of skill involved. Okay, there's understanding technicals, there's support and resistance, where the highest probability of taking a trade is, and we could see that visually. Another thing is if we're in a trade, we don't like what's happening in the trade, we have every right to sell it and take a small loss. If we're playing blackjack and we don't like our first hand, right, the first card that's dealt to us, we can't say, hey, want to know something? Keep a quarter of what I bet, okay, and give me the rest of my money back. No, it's every time you put your money down, it's all or nothing. It doesn't work that way with the market. Okay, when you trade the Emini S&Ps, let's say the trade goes against you, goes in your favor a point, then comes back, you could say, hey, want to know something? Move my stop to break even. So there's a lot of skill involved in trading. It is not gambling, but you must also do your homework to make sure it's not gambling. Next, be patient and wait for the high probability trade setup. Okay, we talked about it earlier. Patience. You must be patient. You must have the time, okay, to be patient, sit and observe what the market's doing and wait for that high probability trade. When I mentor students, okay, and teach them and do coaching, I tell them, think of yourself like a snake. Okay, a snake will sit there and they'll stalk their prey, okay, for hours, and they'll wait for their prey to make one mistake. And the second they make the mistake, that's when the snake goes in for the kill. Okay, we're the same way. We just need to sit there and watch and observe and understand. Okay, this is the level I want. If they move price up and down to this level, I'm going to be a buyer. And guess what? They'll move price down. We buy, and then hopefully we get everybody else and we're correct on the direction, and then we sell into that strength. So just be patient and only take the high probability trades, because again, that's not gambling either, right? That's skill of knowing exactly where the trade is and when not to enter it. You must have a willingness to accept your losses. Probably one of the biggest things that I could talk about, okay? You must have the willingness to accept your losses. A lot of people don't get that. And what that truly means is if you're wrong, it's okay to be wrong. We're all going to be wrong. I'm going to tell you right now, you will be wrong on some trades. But to have your stop loss in there and let them take you out, okay, is having the willingness to accept your losses. It's not about going and try and prove, oh, I don't need to put my stop loss, or I'm going to move my stop loss. No, you have your trade plan, and if you're wrong, and you move on. And again, in your head, don't let the psychology side of it get to you. Don't get frustrated. Don't get mad. Just go, hey, I know this one trade did not work, but guess what? The next one will. And if that one doesn't work, I know that I know how to make money because I have a trade plan that I've practiced over the past 6 months, year, 2 years, however long. And I know at the end of the day, it works. Okay, so have a willingness to accept your losses. Well, that's it for part 4. Next up, part 5.